And this is a work, it's a joint work with my colleague, Randall Mock, who is a professor at University of Berkeley and MBER, Professor Bernard Young, who is Dean of the Business School and US Business School. Both of them are expert in corporate finance. My co-author Wu Jing, who is from Tsinghua University and NUS, and myself, we are sort of housing economists. So we try to study this question about the monetary and physical stimulus package ownership structure and China housing market. This is another example of Clay this morning say China take the lead in many perspectives. And this figure show after the financial crisis, many central government sort of issue macroeconomic stimulus package, but it only produce mixed response, mixed results. United States, like many other countries, the response is very slow or none. However, in China, we can see from this chart, after the end of the 2008, beginning of 2009, the Chinese central government issued the monetary physical stimulus package. The economy responds quickly. For example, the GDP growth increased by the first quarter of 2009, jumped to 11.9%. Compared to a year ago, it's only 6.2%. So our question, I'm going to skip quite a few slides because this is prepared for 1 hour presentation. So these slides typically, basically show after the Chinese central government issued this stimulus policy, then the money supply grows and investment grows. So our question is, whether the success of Chinese stimulation can be a curse in disguise. We address, look in the very specific market, that's the housing market. We argue, say, potential unintended consequence of such stimulus may have surfaced. For example, this is a house price index, constant quality house price index we calculated for 35 cities. By the way, we don't use the China National Bureau of Statistics numbers because last Thursday, I think, front page Wall Street Journal say China decided to scrap those major house price index because when the central government is concerned about the housing bubble, the general public worry about the housing prices too expensive, increase too high. The National Bureau of Statistics House Price Index shows over the last year, the house price increase is only 1.5%. So the government decided they stopped release those price index. We say we are so lucky. What we do is we collect all the household transaction level data, land transaction level data for 8 major cities, now expanded to 35 major cities. And both Wu Jing and myself are econometricians, so we build up our own constant quality. This is how it shows. What these numbers shows, for example, this is another calculation based on what our micro transaction data. It shows in 8 major cities, Beijing or Shenzhen, the top of the line, in Hangzhou, the price to rent ratio grows to, for example, Hangzhou is 65 times. For those of you who are in finance major, this is very similar to PE ratios. And then when I was teaching at USC for MBA student, the students say, Professor, don't tell us all those asset pricing theory, option theory. Just give us the magic number. What's the magic number when you invest in the housing market if you look at the price to rent ratio? I say, okay, I give you the magic number. You don't quote on me. It's roughly, if it's a 15 times, I will invest. If it's more than 20 times, I stop. I never invest in any market, if price to rent ratio, why don't I just rent instead of, basically this is say 20 times means your investment will take 20 years to get your return. In Hangzhou, this shows your investment in the Hangzhou housing market will take 65 years for your investment money to get return. This is another measure. People say, well, maybe your rent, your price has some sort of mismeasurement. We look at another, it's a price to income ratio. This is a price to income ratio. Shenzhen, let's take the lead. Price to income ratio is 22% times. Beijing is 18 times. To give you some more sense what those curve means, use those price to income ratio we calculated in the previous chart. We use a standard mortgage package in China. That's a family of 3 purchase 90 square meter, which is 900 square feet housing units. That's the standard size of the housing units in China. If it's a 30-year residential mortgage with standard mortgage rate of 5.05%, that's already account for 8.5% discount, 20% down payment. Now, of course, the down payment even higher, it's 30%, 40%. Let's assume it's 20%. The previous chart translated into the monthly mortgage payment in Beijing. It's a family of 3 earned income to buy a 90 square feet unit will take 96% of the monthly income to buy that units. In Shenzhen, it's 112% units. In Shanghai, it's a 66. In Hangzhou, it's 60%. Before I joined USC, I worked for U.S. federal government regulating Fannie Mae and Freddie Mac in mid-90s. At that time, we set our rules. If your income to monthly payments it's more than 38%, the loan will be denied. Look at this chart. It's only Chengdu is 32%, right? So this is a very high number. So our motivation is because of those, the central government also concerned. This is the Wall Street Journal last March, that's March 16. It says, in Beijing, the land sale record was set up within a week, not twice, but 3 times. This is a piece of transaction. It shows actually at that time I was just landed in Beijing. I gave a phone call to my former student at USC. He is running a real estate operation in one of the major SOE, state-owned enterprise, Guangda Bank. I say, can we have a time to have a have a lunch? He said, okay, Professor, I'm in the land auction. And then that night, I met him. He just mentioned this piece of deal. He said, it's near the Beijing, about 5th Ring. It's quite remote in my sense. And but now 5th Ring considered a CBD area. But he said, that piece of the land, the government initial asking price is 400 million RMB. And then his boss authorized him, say, you can pay up to 480 million RMB to get this piece of land. I say, of course you get it. He said, no. Baoli is a military company, another centralized SOE. They offer 4.08 trillion. 4.8 billion, I'm sorry. It's 10 times the government initial asking price. Because this is the focus our paper tried to study. Those centralized SOE, they use a huge amount of cash. They bid into those land market or housing market. Where those money come from? It's from stimulus package. The centralized SOE bank issue the money, follow the government order, issue the money, and then they give the money to the SOE companies, SOE companies invest in the land deals. So our question is, why the stimulus package could achieve such a large and rapid effect in China. We also ask what is the potential relationship between the rising housing price with this stimulus package. So our focus will be a little bit different because I mentioned two of our co-authors are corporate finance experts, and then we try to look at the ownership structures rather than other perspective. This morning, the panelists already discussed potential the currency motivation theories and stories. We look at the corporate structures, ownership structures, and corporate behaviors in this behavior. And then we ask whether the success of this stimulus may well disguise a curse. So I hope by the end of the next 5 minutes, 10 minutes, I will let you bring home or convince you the central government remain direct control in China, remain direct control over many of the economy via SOEs. And then effective of the macro, physical, and monetary policy may well lies in the micro details. There's a lot of unintended consequence of, for example, the resource misallocations in this. I'm going to skip this. Basically, this slide shows it's commonly view the Chinese SOE reform. There are three phases. We are focused on the phase 3. That's basically it's a Guojingmingtui the phase. And then this chart shows the state-owned enterprise currently has 150,000 among the 3.5 million private enterprise. However, among the 156,000 SOE, only 129 are centralized SOE. That's Yangqi. It's closely related to the central government. And if you look at the market share, even the SOE, it's only about, counted by number, it's 3% of the entire private enterprise, but the asset market share is about 30%. However, if you look at the banking sector, those SOEs account for over 72% of the total banking industry. This is not only 72, and then for the rest of those non-SOEs, the central government still has the different way to indirectly control. So the majority of the banking sector is controlled by the SOEs. And then there are literatures discuss about the SOEs, the policy burden, multitask theory, sort of very much like what we know about the GSE, government-sponsored enterprise, Fannie Mae and Freddie Mac in the United States. When I was regulating Fannie Mae and Freddie Mac, my job is make sure their safety and soundness, they don't do risky business. However, by mandate, the GSE, Fannie Mae and Freddie Mac also has a policy burden. They have a housing goal, their mandate to lend the money to those low-income, low-credit quality household. So these kind of very similar to the Chinese SOE situation. They have a profit maximization goal. They also have a goal to respond to the central government policy calls. So the CEOs of those SOEs are measured by those multiple tasks. So that's how in the next few slides, we'll see why the Baoli military company will invest in the real estate business. This is a picture show after the 2008 fourth quarter, 2009 first quarter, the state-owned SOEs response to stimulus, the red curve is an investment. It's increased dramatically. And then the centralized SOE response to stimulus actually accounts for 60% of the total activities. And then local SOEs, it's about 25%, and non-SOE private company, it's only about 15%. So what we do is we ask, say, why they invested pick the real estate because remember they have two responsibilities. One is following the government order to spend the money to invest, to stimulate the economy. The second goal is to make profit because the SOE goal is 增值保值, it's keep the value and make the profitable investment. So they look at those charts. The mining is of course on top, but mining industry is pretty much saturated. So they go to the second best, the real estate. Also they have a very good growth expectation about the real estate market. So in order to spend the money, that's the first goal. Second is make profitable investment, they go to the real estate market. This is a share of, say, among the 129 centralized SOEs, only 16 of them are approved by assessors that's state-owned assets supervision administration commission of the state council. They only allow 16 of them to do real estate business. It end up 94 of the 129 jump into the real estate investment business. And then what we did is we collect a full sample of the land transaction deal in 8 major cities, and then we do micro-level econometric analysis to see what driven those price going so high. This is sort of the chart showed the central SOEs after 2008, 2009, and 2010, their market share increased dramatically. This is another chart showing in Beijing. Beijing is where many central SOEs headquarters is located. They're even more dramatically. In 2010, their market share is 50%. So after that, we've done a bunch of those hedonic microanalysis. We control for the centralized SOE factors. It showed the market premium overbidding in the land market is almost over 17% for the land parcels during the 3,500 transaction deals we collected. And then we also try to see why those central SOE, whether they have too much money, they want to burn money, or there's other incentive. We try to see some argument maybe those central SOE has a low funding cost because they take advantage of low funding costs. They can afford to bid high. But our econometric analysis shows it's not 100% explain the low funding cost did not explain all the stories, because in our analysis we show the hedonic models, those negative hedonic factors, actually the central SOE don't care about that. So that means they have other motivations. So what we did is we do another interaction with how distance those central SOEs land transaction deals away from their headquarters. Our argument is if they are located in Beijing, they have political advantages, they have a lot of connections, it's easier. It turns out this is highly significant. That explains why Beijing sees such a big SOE overbidding behavior, because they have a lot of political connection. They want to dominate the real estate market. That's what they do. And also we interact the central SOE with the stimulus package. It shows after the stimulus package issued, SOE's effect is strong and positive. We also do a bunch of robustness tests. For example, we hire 20 undergraduate students supervised by 2 Ph.D. students work for 2 months, and then combine, merge all those land transaction data to the housing transaction data in the cities. We have a huge amount of housing and land transaction data. We do a bunch of hedonic robustness check. To conclude, I hope we have a paper available. It's a lengthy paper, about 60 pages. It gives a lot of details. We try to convince you with those empirical analysis that China is fundamentally still a command and control economy, which is to say the central government can order the SOE bank to lend, and they lend. the central government can order centralized SOE to invest, and they invested. However, the success of the Chinese stimulus can be a curse in disguise. Because the ordered credit and investment, the purpose is when there's a financial crisis, there's a credit crunch, and the government stimulus package will sort of inject into those credit crunch areas to stimulate the economic activities. However, the order of credit and investment may not equal to the real business opportunities. And China's seemingly high effective macroeconomic packages may well have induced costly resource misallocations. This is the last page. The Chinese, what's the potential effect of the potential major correction this morning? There are some speakers say in Chinese housing price. We argue the home buyers have much more equity, that's true, than typical subprime borrowers in the United States, which can provide more equity cushion in shared banking system. However, the financial risk associated with those developers, especially the CSOE, centralized SOE developers, are very high. This is, we need to take much caution about that. The decline in housing price could be significantly affect the investment, which is a key driver for the China's real economic growth. Finally, the decline in household price may also imply a significant wealth loss to many Chinese people, because right now there's no alternative investment vehicles in China. So people put every money, their saving, retirement money, into the housing market. Imagine if there's a 20% of the price correction in the housing market, which means their retirement money, pension fund, and their savings were cut by 20%. That's a major impact. Thank you.